Good morning. Senator Boner,
Here.
Senator Case,
Present.
Senator Nethercott,
Here,
Senator Scott,
Here.
and Chairman Driscoll.
excused. All right, with that, we'll start with Senate File 74, Water and Sewer District Elections Amendments. Good senators, I walked the body through the introduction of this bill yesterday, as you might recall. We worked it through the interim. Essentially, what the bill does is we required elections for water and sewer districts if that water and sewer district has taps in excess of 1,000. With that, I'll turn it over to any other senators who'd like to walk through the bill and discuss the bill. Senator Scott?
Madam Chairman, most of these water and sewer districts are a good deal smaller than that. But when they get this big, you don't have the degree of interpersonal relationships you do in the smaller ones that essentially enable them to operate a good deal more informally. We've had a problem up in my district with a board that was there originally, has had now has a good part of its customer base in a couple of municipalities. There was a proposal, the committee may recall, to let the cities take it over. That's present when the city is first formed, but they're not in a position to do that sort of thing at that point. And then there isn't a provision afterwards. And there's been a good deal of difficulty with the between the water and sewer district and the city. And frankly, it was my judgment that a good deal of the difficulty could be alleviated if there was a more formal election. And the testimony was the elections were not advertised. The word didn't get out. You had half a dozen or a couple dozen people voting in where you potentially have several thousand. And they're big enough so that putting them on the general election ballot, I think, would make them much more responsive to the public and the needs of their customers. And I think would be the easiest solution to the difficulties that we've got up there, that once they get to a certain size, you just can't rely on the informalities of the smaller way of doing things. So 1,000 taps is somewhat arbitrary. I think it catches 2 districts currently, and there's some thought that might decline to 1 district. But I think it would solve the problem with the least hassle all around. So, Madam Chairman, that's basically what it is. You ease into it, the terms don't mesh. So you can't extend somebody's term, so you allow them to fill it in the normal vacancy procedure until you get to the appropriate election. And that makes the transition pretty simple. That's what the provisions are all about. So be happy to answer any questions.
Question for you, Senator Scott. Anticipating a lot of fixation over the $1,000 number, which is, as we indicated, somewhat arbitrary, but and you just testified that most of them are smaller. Did we get information during the interim about how many water and sewer districts there are that are less than 1,000?
We had specifics, and I don't recall the exact figure. I think it was more than a dozen, but I don't recall the exact figure. And most of them are a lot smaller. There's not any in the immediate vicinity. They're either a couple big ones or they're the much smaller ones. And the much smaller ones, the informal, I say informal, but the less formal procedures where they hold their own election seem to be working just fine. It's a couple of these big ones that have gotten big and impersonal that we've got the trouble with. And the one specifically in my district.
Senator Scott, how does a water and sewer district board get created and how are those members originally appointed?
There, you have to have, as I recall, and I'm not the expert here on special district, but there's a formation election. I think they have to get the permission of the county commissioners. And in this case, the district was formed well before the municipalities. Well, one of the two municipalities involved. One of them is a very old one, but it's grown into the district. The other one is almost entirely within the water and sewer district involved. And about 70% of their customers are inside, as I recall the testimony, that municipal limit, and the rest are in the surrounding area. And if you try to have the city take it over, you have complications with service to the surrounding area and to the second city involved. So this seems to be the most simple solution to the problem.
Madam Chairman,
Senator Case.
by no means an exhaustive search, but there are quite a few of these districts. South Cheyenne Water and Sewer would be one you'd know. South of Laramie Water and Sewer, Wright Water and Sewer, Central Wyoming Regional Water and Sewer, South Torrington Water and Sewer, West Highway Water and Sewer, Wardell Water and Sewer, Pioneer Water and Sewer District, Aspen Water and Sewer District. So they're out there. There are various sizes. I think there's quite a few that are, they're not 1,000 taps, but they're at least several hundred taps. And so anyway, that's all I have. That 1,000 number seems pretty big to me. Yeah.
And it was intentional, Madam Chairman. We wanted to get out of involving most of these where there don't seem to be any problems.
Any additional comments from the committee before we turn it over to public comment? Seeing none. Those of you wishing to speak on water and sewer districts, please come forward. Curious? Seeing none? All right. All right. We have the Wyoming Association of Municipalities. Good morning.
Good morning, Madam Chair. For the record, David Fraser, Executive Director, Wyoming Association of Municipalities. I almost didn't get up, but I just wanted to say thank you for addressing this issue. We, of course, initially favored a more aggressive approach to the issue, but I do agree with Senator Scott's statements that this would probably would certainly move the issue in a more positive direction. So as to the number of 1,000 taps, I don't have we don't have an opinion about that. Again, you know, our immediate concern is the issue with the specific water district as it affects a couple of our members. So I wouldn't, you know, so again, I wouldn't be opinionated about what you did with the numbers. So anyway, just wanted to speak in support of this and say thank you.
All right. Thank you, Mr. Fraser. Any additional public comment? All right. Seeing none, public comment is closed. Back to you, committee.
Chairman,
Senator Scott.
move we report it out with a due pass recommendation.
All right. Moved by Senator Scott, seconded by Senator Boner, although that is not the custom of the Corporations Committee. Senator Case.
I would move to lower 1,000 to 500. And when I think about it, if you had a community with 1,000 households, that's what we're talking about. That's a pretty big sized town. So I move to make it 500.
Further discussion, Senator Scott.
Madam Chairman, I have a little bit of a reservation about that.
I'm the one with the reservation.
I don't know that we catch any more with doing that, but we have the only testimony in the problem has been in the really larger. So I think that we would eventually get more districts in And if it proved that there were problems with the group between 500 and 1,000, then that's a simple fix in the future.
Senator Scott, would you consider cutting it in half? Dividing the proposal, a compromise of 750?
I wouldn't have strong feelings about that.
Looks like we're getting somewhere. Senator Case?
Certainly.
All right, this sounds like a friendly amendment for 750. Further discussion on amending the TAP number from 1,000 to 750? Seeing none, all those in favor, please say aye.
Aye.
That motion has passed. Any further amendments?
Question on the bill?
Question being called, roll call.
I suggest we leave it open for the chairman, but let's have the roll call. Just to keep our lives.
And the vote on Senate File 74, Senator Boner,
Aye.
Senator Case,
Aye.
Senator Nethercott, Senator Scott,
Aye.
and Chairman Driscoll excused. The vote would be 4 aye, 1 excused. Okay.
I would like to acknowledge in the audience my brilliant intern, Grace Steenbergen, who has joined us this morning. And I might, as a project here this morning, Ms. Steenbergen, is maybe if you can, look for information associated with the number of water and sewer districts in the state and the approximate size of those water and sewer districts. Senator?
Madam
Please.
Chairman, I might suggest that Ms. Steenberg contact Mark Pepper, who's with the Wyoming Water Association. He will be a wealth of information on that.
Mr. Fraser, would you help Ms. Steenbergen as well? Thank you. She's like, awesome. Welcome and good morning. All right. With that, committee members will go over to Senate File 75, Deferred Annuities Minimum Non-Forfeiture. Senator Case, you introduced this bill yesterday in the Senate. Would you like to give us a brief overview this morning?
Thank you, Madam Chairwoman. Madam Chairwoman, this has to do with the situation when a person discontinues their life insurance purchase, and this is the amount that is returned to them, and it is relating to the interest rate on that amount when they have decided they no longer want to purchase the policy. And so there are conditions about when that policy becomes vested, and there are minimums and maximums and abilities which others can talk to. But what this does is removes a 1% rate in the law and change it to 0.15%. As you know, we've come through a period of extremely low interest rates in this country. In fact, short-term rates have actually almost been negative. And so that, I think, is where the bills kind of comes from. I would also point out, yes, it looks like interest rates are going up, possibly to a lot of inflationary government spending, but that it's not a good policy, I think, to have something in the law when there's a contractual basis for the interest rate. Ms. Lee is here, and we have Commissioner and the Department of Insurance is here, so I'm sure they all would like to weigh in.
We'll start with the Department of Insurance as state agency. So please, Director Rude, good to see you this morning.
Good morning, committee. For the record, it's Jeff Rude, the Insurance Commissioner, and we have no concerns with the bill. This is similar to what we've seen in majority states have been passed last year or likely to be passed this year. I will note it doesn't affect existing contracts. It only goes forward. And there's nothing that restricts a company from raising the rate if they want to from market changes or just for a competitive advantage somewhere. It's lowering the minimum is all that it's doing. With that, I would be happy to take any questions or turn it over to any of the other interested parties.
Questions for Commissioner Rude? Senator Boner?
Oh, thank you, Madam Chairman. Commissioner, we mentioned, I think we just heard some skepticism about having, these rates be dictated by statute at all? Could you just go over the reason or the benefits for having in statute? I mean, this is just one part of a larger paragraph that goes into quite a bit of detail as to how these rates will be determined. Could you just explain some of the benefits?
Well, Madam Chair, Senator Boner, really, this was something that came out of a model law from the NAIC where all the states got together and they looked at it and they said in these products, I think they're based mainly on 5 and 10 year. I guess I don't want to stretch my knowledge and over promise, but these annuities are tied to shorter term products, and so they can fluctuate more. As for why they came up initially with 1%, I could not tell you, but it had been agreed upon by the states at the NAIC as part of the model law. And now I don't think anyone anticipated rates going as low as they've been. So.
Follow up? Senator Scott?
Madam Chairman, I'm really wondering about this bill. It is a minimum rate. Somebody backs out 1%. We were in a prolonged period of low interest rates, but this national administration and the one that preceded it were both spending money like water, and as we know, interest rates and inflation are linked together, and inflation is always a product of bad monetary policy. And we've had, 6 years at least of that now. And we're getting in considerable trouble and the rates are going up. I wonder if this bill isn't more than a little, it's either way too late or premature. I'm not quite sure. Is it wise to proceed with what's happening with interest rates is my question, Madam Chairman.
Commissioner?
Madam Chair, Senator Scott, I guess my response would be, it's only dictating the floor. And as such, any of these companies can put a higher rate in there, and if they want to grab market share, advertise it and compare to other products and say, this is what our competitors do, but hey, we're still at 1%. Wouldn't you rather on this new contract sign with us? Is it a little late? Probably so. Hindsight, it would have been probably more appropriate to have it a few years back, given the rates being as low as they are.
All right, thank you. All right, Ms. Lee?
Good morning, Madam Chairman and committee. My name is Kristen Lee, and for the record, I work for a law firm in town called Brownstein Hyatt Farber Schreck, and I represent the American Council of Life Insurers in this instance. My client, Mr. Vince Ryan, is participating by Zoom. He's in Washington, D.C. today and had planned to be here. Actually, this came up pretty quickly. So he... Can I see? In this case, that is true, Senator Case. Yeah.
Mr. Ryan, are you with us? Can you hear us okay? We'll give you a minute as you transition in. Don't miss any testimony.
There's
Yep,
Mr.
I'm
Ryan.
with you. I can hear you loud and clear. Can you hear me?
Great. We can. So wonderful. So we'll flip it back over to Ms. Lee, and we'll look forward to hearing your comments when she's finished.
Thank you.
Well, thank you, Madam Chair. I think we should turn it over to Mr. Ryan in the interest of time and expertise.
Mr. Ryan,
Thank
floor
you.
is yours.
Thank you, Madam Chairwoman. And thank you, Senator Case, for bringing this. And I wanted to thank the committee for its sponsorship of Senate File 75. And thank you for considering our views today at today's hearing. As you've heard, Senate File 75 would amend Wyoming law to conform with a technical amendment that was recently approved by the National Association of Insurance Commissioners to a model law. And as you've heard, the division, along with the other regulators across the country, participated in the process of developing this amendment. Currently, Wyoming law requires that individual deferred annuity contracts provide the annuity owner with a guaranteed minimum value if the annuity owner stops making payments before the end of their payment term. This is referred to as the non-forfeiture amount. And as you know, this would lower that minimum guaranteed amount from 1% to 0.15, which is needed due to the ultra low interest rate environment that was brought about by the economic downturn stemming from the COVID-19 pandemic. Just for context, in 2020, the yields for the US 5-year and 10-year treasuries to which this specific guaranteed minimum amount and these annuities are tied were as low as 0.19% and 0.52%, which are obviously much lower than the required 1% that's baked into the current statute. Given that economic downturn, the insurance regulatory community through the NAIC determined that it was impossible to support that minimum rate given the historically low interest rates. This bill would allow our companies greater flexibility to adapt our products to a potential future low rate environment in which we may find ourselves and help promote expanded product availability to Wyoming consumers. This is really preparing Wyoming, preparing the rest of our country for the next economic downturn should we unfortunately come across one. As the commissioner stated, this would only impact newly issued annuity contracts and would not impact annuities that have already been issued. And furthermore, I did want to highlight that, under current law, and if this bill were to be enacted, that minimum guaranteed interest rate used by companies in their contracts would continue to be based on a specific calculation in statute that allows interest rates as high as 3%. So that, simply put, I think while the law would dictate what the floor is, the market would actually set the ceiling. So if interest rates one day go to 0.8%, then we would be required to pay out on that 0.8%. We would be required to use 0.8% in that calculation. If we hit another economic downturn and it's 0.16, we would be required to use 0.16 in that calculation. So in other words, if interest rates increase in the future, the consumers of these products could receive a higher interest rate. And this change in the bill is only intended to address extreme drops in interest rates and is the absolute, it would be the absolute last safeguard that would be, that would come into play under this law. So thank you for your time. I'm happy to answer any questions, and thank you again for having me.
Good client, Ms. Lee, good client. Questions for Mr. Ryan? All right. Senator Case, give you a minute, formulate one.
Well, Madam Chairman, I'd kind of like to understand a little bit what the consumer is actually purchasing. And, it's life insurance. It's got an annuity payout, which I don't fully understand all the time. What are the situations that the consumer faces with regard to non-payment or cancellation, or if it goes to term and the consumer dies and there's a payout then? Can you kind of like walk through the different ways and where this interest rate only applies to the one situation as I understand it? Am I making any sense? I hope so.
Mr. Ryan?
Thank you, Madam Chairwoman, and thank you, Senator, for the question. This applies only to individual deferred annuities, so it does not apply to life insurance policies specific to individual deferred annuities. So it's, say if I were to go to my insurance agent or broker and I would purchase an annuity from him or enter into an annuity contract with a specific carrier, and I would agree, because it's a individual annuity for me and it's a deferred annuity. So the payout from the annuity, we're deferring to a specific, date or time in my life cycle. So I could choose, my anticipated retirement date for the annuity to start kicking in, or I could choose a certain age that I wanted the annuity to start paying out. And I would month to month pay a certain amount of premium into that annuity contract until that date. This interest rate would only ever come into play in a very rare instances that happen, to be quite honest, where in the middle of the contract I choose to terminate the contract, and then the insurance company pays me what I have already paid into the contract, or I let the contract lapse by not continuing to submit payments on that month-to-month basis. So that's when this would come into play.
So as Madam Chairwoman, if just follow up a little bit, would the purchaser of this product be someone that this is their only retirement, or it's supplemental, or what are the circumstances of people that buy these annuities?
Mr. Ryan?
Deferred annuities. And then maybe what are the tax implications of the deferred annuity? I guess if you're paying in and you get it when your income's lower later, that's a tax advantage. But anyway, could you just help us who your consumers are?
Mr. Ryan?
Sure. Just by way of background, the average income for an annuity purchaser in the United States is $69,500 per year for salary. So this is a product that is designed specifically geared towards middle income America. And these are typically supplemental to other retirement accounts that an individual might have, such as their 401k or a Roth IRA, et cetera. And this is different from other retirement income products in that annuities are the only retirement income product where we can actually guarantee a set amount of income for life. That's the way an annuity product is structured. So those are the kinds of individuals that these products are marketed towards, and it's supplemental to existing retirement accounts. As for tax implications, I'm not a tax lawyer. I just submitted my H&R block this morning, so that's exciting. But the money that goes into an annuity is after tax dollars that an individual has, right? So they receive a salary from their employer. They take a certain amount of dollars a month in premium of their after tax dollars and put it into an annuity. So you're not necessarily paying taxes on that. An annuity income can be taxed in certain jurisdictions. And Wyoming is one of the only states where an annuity is still taxed. Iowa is moving to not tax annuities and other sources of retirement income, but you would still have to pay taxes on certain interest rates or interest gained on your underlying investments, I believe.
One more follow-up, Madam Chairwoman. So do these annuities pay until the person dies, or do they pay a fixed amount and terminate, or they pay for a fixed number of years? How does that work?
Mr. Ryan?
Yeah. Sorry, I heard my echo in the room there.
No, I'm trying to also figure out why I got mixed up with life insurance. So I apologize for that, but if you could, it'd be helpful. Thank you.
Sure.
Go ahead, Mr. Ryan.
Thank you, Madam Chairwoman, and thank you, Senator, for the question. You can structure the annuity payouts differently. You can choose to only have it for a set number of years, whether that's 30 years after you retire. You can have it set for life until the day you die. You can also select, when you die, your beneficiaries can still receive payments, or they receive half of what your payment was. There's a lot of different kinds of coverage. I say coverage, which is really an insurance term, but there's a lot of different ways you can structure the annuity payout.
Senator Scott, you looks like you have some questions. I see a furrowed brow.
Madam Chairman, I I've expressed my question, which is really, is this an appropriate bill given what's happening in the interest rate environment? And my instinct is, frankly, is that we ought to let it sleep, but want to hear any additional testimony that there is.
Ms. Lee?
Thank you for your time.
All right, thank you. Any additional public comment? All right, seeing none, public comment is closed. Committee, back to you.
Move the bill.
Moved by Senator Case. Any further discussion? All right, roll call vote on the bill.
On Senate File 75, Senator Boner,
Aye.
Senator Case,
Aye.
Senator Nethercott,
Aye.
Senator Scott,
No.
and we'll hold this open for Senator Driscoll also. Okay, thank you.